Nomvuyo, great to have you with us on Open Exchange this morning, looking at those manufacturing sector reports that have come through, the likes of the HSBC flash PMI number coming through from China. That really encouraging, slightly higher than expected, still below that 50 mark, but an encouraging sign from that end. And then, of course, we've had that factory report, or the manufacturing report rather, coming through from the United States, and that really seemed to be fueling the risk sentiment that we've seen on the markets today, enough to allay fears around the slowdown and concerns around the slowdown in China?
I certainly wouldn't say that this month's PMI data is going to allay fears of a slowdown in China, but certainly it is encouraging that one is starting to see a divergence in the major economies, with China and the US seeming to either pick up speed or at least be holding relatively steady, and that's in contrast to the continued weakness that we see in Europe and the possibility that growth in that region could slow even further than we've seen already. Some very weak PMI numbers came out of Europe last month, and I think a similar print is expected for the month of April.
As we know, we've got those numbers which are coming out today from Europe, expected around 11 o'clock South African time. We've also got Kagiso PMI numbers coming out from the local market. What are your expectations from those numbers?
Well, we're expecting the Kagiso PMI to be a little bit softer than it was in March. We're penciling in about 53.6 points, and that would be down from 55.1 points that we saw in March. But overall, still an encouraging and positive number should it come in line with our expectations, especially when you see what's happened in Europe and what's happened across the globe. So the fact that it would remain above the key 50 level, I think, for the local industry is quite encouraging. Although, of course, given our links with Europe, the possibility of further slippage there in the manufacturing sector remains the preeminent risk to the local outlook. But so far, a very positive, encouraging outlook so far for the local sector. That
certainly is what international economists have been saying as well. We are going to start seeing the impact of Europe really being seen in the Q2 numbers. But in the meantime, let's focus in on what's taking place today. We've got the ECB meeting today and tomorrow, and they're going to be, of course, setting the tone for the rest of the trading week when they come out with their statements. What are your expectations with regards to the likelihood of a more dovish stance this time around?
Well, we absolutely expect a more dovish tone from the ECB. President Draghi was testifying before the EU Parliament last week and was, had quite a dovish tone at that outing. So we'd expect that tone to continue at the post-meeting announcement this week. There were concerns that inflation was starting to pick up in the Eurozone, and you had seen officials become a little bit more hawkish. But given the further turmoil that's engulfed the region with regard to the debt crisis, I think that's pretty much fallen off the agenda for now, and particularly with elections coming up in key regions in Europe, I think there's going to be a much more dovish tone, but perhaps a slightly more cautious one. We've been saying for some time that we expect the ECB to continue to cut rates this year to about 0.75%, but we don't anticipate that it's going to happen at this meeting. But we do think that they're likely going to try and prime the markets for a rate cut somewhere down the line.
Yeah, as you say, reading the markets, so let's look in on the euro dollar and how it's trading. We've got the euro dollar sitting at 132.26. It briefly touched a 132.84 overnight. What are your thoughts on positioning on the currency front, of course, ahead of the ECB decision and the Greek and French elections which take place on the weekend?
Well, I think caution is certainly going to have to be the name of the game, because firstly, today there's going to be quite a lot of catch-up play. Some European markets were closed for the holiday yesterday in line with South Africa's closure. So there's going to be that element to watch out for today. But also I think that the movement in currency markets is probably going to be limited by the fact that markets are waiting on the ECB's announcement and also non-farm payrolls on Friday, and then again the all-important election results out of Europe. So should it emerge that the worst-case scenario would be an inconclusive result in Greece as far as the election is concerned, and maybe a victory for Mr. Hollande in France, and that could certainly, in our view, weigh on the euro. So I'd say ahead of those elections, probably caution, but over the next 2 weeks, we see the euro taking on a relatively bearish tone, and some weakness should come through into that currency cross.
Let's broadly look at the dollar and how it's trending, because it was boosted by that manufacturing report coming through from the ISM showing the strongest growth in 10 months. We've got the ADP employment report coming through today, and we're of course expecting non-farm payrolls data on Friday. So what are your expectations as to how to position yourself on the dollar front on all the crosses in the next few days?
Well, certainly as far as the dollar is concerned, it has enjoyed, some renewed vigor on the back of that ISM result. But I think direction-wise, there's going to be a lot of attention paid to the report at the end of this week. That would be non-farm payrolls, and a largely positive result is expected from there. There had been some doubts over whether the US economy was in fact gaining traction or whether this was a temporary kind of seasonal factors, and I think that's probably going to make this Friday's report all the more important. So very similar to the euro, I would probably advocate for some caution ahead of that announcement, and of course a better than expected result could then play into further dollar strength.